Hello everyone, I am Professor Rajmohan Nair, Assistant Professor at JG College of Commerce. Today in this session, we are going to cover some theoretical aspects of consignment accounts, which is a part of syllabus of Accountancy 1 subject in semester 1. So the first question what comes in our mind will be, what do we mean by the term consignment? It is a type of business wherein business enterprise does not have any resources to open a branch in a distant city or in a foreign country, but they sell their products through some experienced dealer present there in that particular market. In other words, it is one of the method of selling the goods at a distant market, at a distant place through the help of agents. Hence, the principal and agent relationship establishes here in the consignment business. Such dealers and agents are conversant with the market conditions at the respective distant place. They are aware about the consumer behavior, and ultimately he would sell goods on behalf of owner of the goods and at owner's risk. Here in this entire business transactions, we can say that the ownership is not transferred from the person who is sending the goods to the other person. Here, only the possession of the goods is transferred from one person to the another goods. That's why the risk of the entire goods remains with the person who is sending the goods. Here, a brief picture we can see of consignment accounting. The first person is sending the goods to the another person for the purpose of selling the goods at that distant market. The person who is sending the good is known as consignor. The person who is receiving the good and who is going to sell the goods on behalf of consignor is known as consignee. He would then sell the goods on behalf of consignor, obviously for some consideration, and this consideration of income is known as commission. Characteristics of consignment business. The relation between two parties is that of principal and agent. The person who sends the goods to the agent is called consignor, and the person to whom the goods are sent is known as consignee. The remuneration, the consideration paid to the consignee, that is agent, is known as commission. If the goods are damaged or destroyed, then the sole responsible person will be consignor. The consignee is entitled to recover all expenses that he incurs in connection with the consignment. The consignee is bound to take a proper care of goods received by him, though he is not responsible if the goods are damaged or destroyed. Consignee has to sell the goods according to the instructions of the consignor. Parties involved in the consignment business. As we saw earlier, there are two parties basically over here in the consignment business. The first person is known as consignor and the second person is known as consignee. And the relation between consignor and consignee is of principal and agent. The consignor is a person who sends the inventory, who owns the inventory, whose main focus is on earning the net sales, and the risk of entire stock, the inventory, will be with of consignor. In case of consignee is the person who will be holding the inventory, that is the possession of the goods will be with the consignee. Consignee do not own the inventory as the ownership is not transferred from consignor to consignee. Focus on selling. He earns commission, can return unsold inventory. Now, the main question, that is consignment and sale a same term or a different term? And this particular question is also asked in the university. So the difference between sale and consignment is, in case of sale, the ownership of good is immediately transferred. Whereas in the case of consignment, the agent does not become the owner of the goods. Hence, ownership is not transferred. Consignment is an agency arrangement, whereas sale is an agreement to sale where goods are exchanged against consideration and the ownership is transferred immediately. In case of consignment, the revenue or income is recognized when the consignor sends the goods. Whereas in the case of sale, the revenue is recognized immediately. Pro forma invoice. Pro forma invoice is a statement which is sent by consignor to the consignee. And this statement would include the details of goods dispatched, namely types of goods, quantity, its weight, price, and packing, etc. This statement is known as pro forma invoice. You can see the specimen attached over here, that is of pro forma invoice, which you can see in the screen. Pro forma invoice is same like a normal invoice which we prepare in the normal business. It resembles same like that invoice, and this statement is a main communication between the consignor and the consignee. And the consignor is a person who will send this particular invoice to the consignee. Account sales. Account sales is a periodical summary statement sent by the consignee to the consignor. It contains details regarding sales made, expenses incurred on behalf of consignor, commission earned, unsold inventories left with the consignee, advance payment or security deposit with the consignor and the extent to which it has been adjusted, and the balance payment due or remitted. Now, the main aspect, that is commissions. The main consideration that the agent, that is consignee, would earn in this entire business undertaking is commissions. So there are three different types of commission. The first type is ordinary commission. The term commission simply denotes ordinary commission. It is based on a fixed percentage of gross sales proceeds made by the consignee. It is given by the consignor regardless of whether the consignee is making credit sales or not. This type of commission does not give any protection to consignor from bad debts and is provided on the total sales. The second type of commission is del creditor commission. This commission is provided to increase the sale and to encourage the consignee to make credit sales. The consignor provides an additional commission generally known as del creditor commission. This additional commission, when provided to consignee, gives a protection to the consignor against bad debts. In other words, after providing the del creditor commission, the bad debts are no more the loss of consignor. Hence, to get away from the loss of bad debt, the consignor is providing an additional commission to the consignee, and the entire loss of bad debt will be borne then after by the consignee and not the consignor. It is calculated on the total sales unless there is any agreement between the consignor and consignee to provide it on credit sales only. Overriding commission is the third special type of commission. It is an extra commission allowed by the consignor to the consignee to promote sales at higher price than the specified, or to encourage the consignee to put hard work in introducing new product in the market. Depending on the agreement, it is calculated on the total sales or on the difference between actual sales and at the sales at the invoice price or any specified price. In order to encourage the consignee to earn higher margin, it can also be in a form of share of additional profits made by the consignee on the goods which are sold. So it is an extra commission given by consignor to consignee to put on hard work in introducing new products, or else if the consignee is able to sell the goods over and above the total price, that is at the invoice price or on any specified price which is over and above the actual sales. So thank you so much.